Hey guys, welcome to RionFx tutorials, RionFx mentorship. So today what I'm going to be showing you guys is just a basic price action system of trading, understanding what price action is and how to focus more on price action to use them on your trading. Whereas instead of using so much indicators that makes your trading lag and kind of make your chart look very disorganized. So let's get right straight into it. Okay, right here, guys, we have the USDCHF chart, which is the US dollar to the Swiss francs. Okay, so I'm just going to be clearing out basic things that we need to know about price action. So when we talk about price action, we need to keep in mind, four basic things, and those are the four things I also keep in mind when I'm discussing about price action. So first of all, I want you to take note the difference between support and resistance and demand and supply. I want you to take note of your candlestick patterns. I also want you to take note of um, rejections and breakouts and retest. Then the last but not the least thing, you should also think about while trading price action is price zones, and psychological areas. So I'm just going to go right straight into it. So here, let's move to the daily. So on the daily here, let's kind of reset this chart first a little. Then here, so what you need to do first, in trading price action is you have to identify the trend, which is a normal thing when you're analyzing your charts. The first thing you have to do is to analyze your chart. So first, you would want to identify that this right here is a downward trend. This right here is a downward trend. Once you can identify that, then the next thing you also want to look out for is you want to look out for support and resistance, demand and supplies. So the difference between support and resistance is different between support and resistance and demand and supply is demand and supply are usually a place in the market where prices haven't gotten to for a very long time. So the time frames I use to consider my demand and supply are my 4 hours and my daily. Whereas on my smaller time frames like the 1 hour, 2 hours, 45 minutes, and 30 minutes, I would consider price levels where I've seen a lot of rejections at or breaks and retests as support and resistance. How do I mean? Take it for instance, this point here. This point here would be a demand level for me because we see prices not getting to this level for a very long time. You can see how prices have been above this level and finally getting to this level. And then we see price reject at this level. So there are two things usually that happens at demand and supply levels. Most times we find a lot of rejections at demand and supply levels. It's kind of hard for prices to break or smash through right a demand or a supply level. So most times when you get at demand and supply levels are rejections because prices have not really tested those places for a longer period of time. But in the case whereby you find prices being having tested a demand or a supply level several times, there are chances that it could finally break, pending the pattern in which it uses to come into the demand or the supply region. Then take for instance here would be my supply region. Here would be a supply region for me, and here also will be a supply region for me, and possibly here also will be a supply region for me. And remember I said I use the higher time frames to determine my supply, to determine my demand and supply zones. Now you can see prices haven't gotten to this level in a very long time. Prices haven't gotten to this level in a very long time. Prices haven't gotten to this level in a very long time. You see, but on the other hand, when we move to the smaller time frames, I'll explain why support and resistance are quite different from your demand and your supply. So now another thing also you would look for while trading price action, like I said, identifying the difference between support and resistance, demand and supply. You also want to identify the trend of the market. You also want to identify price action, like price action candlestick patterns. So first of all, you could, if you look closely here, we have this setup. We have a bearish candlestick, we have some sort of doji or a long body doji, and then we have a bullish candle, which is a strong bullish momentum candle on the daily, and this is happening on our demand level. Now remember, from our knowledge of candlesticks is that whenever we are looking for candlesticks formations or price action candlestick patterns or formations or whatsoever, we always seek to find them at strongholds, either support and resistance or demands and supplies. Now what this simply means is, because when prices create those candlestick formations, be it a reversal or a continuation kind of pattern on either a demand, a supply, or a support and resistance, it tends to be stronger, because basically what Forex is a law of demand and supply. So what you're doing is, whenever prices get to a demand, we are hoping to buy. When it gets to a supply, we're hoping to sell. So you saying a price action, candlestick formation at this level, especially when it's a reversal candlestick formation, it's just clear indication and gives you more confluence and confidence in your trade, because that's basically what you're looking for. Now remember, earlier on I said, when trading demand and supply, we are basically looking most times for rejections, because prices haven't gotten to that level so many times for it to want to break out of it just immediately. So rejections are usually the first things on our minds. Now if you can see here, this was price coming into here, and then price getting rejected, some form of consolidation and indecision created this doji at this point, and then we have a bullish momentum candle. Now just a moment. So now here, at this point here, we could identify this as a morning star. Morning star is a bearish candle followed by an indecision candle, and then a bullish momentum candle that closes at least equal the close of the open of the last bearish candle, or above it. Now after this, we could see prices moving all the way up here to this point in time, to around this level here. There was a sell zone around this level. Now also, if you could also take notice of something, you also have things we call price action chart patterns. Now here we have some sorts of heads and shoulders at this point here. We have some sorts of heads and shoulders here. We have prices getting to this low, and then creating a lower low, and then creating a higher low at this point in time, which gives us some forms of heads and shoulders here. We have the head and both shoulders here. So what another thing we'll be looking out for this pattern is, we also want to find where the neckline is, and the neckline is somewhere around here. So we have our neckline here around this level here. These are our neckline. Now remember, one of the third things we also have to consider while trading price action is, we also want to consider breaks of support and resistance, and retest of them. So here we have a resistance here, because now this is going to help me explain the difference between demand and supply. So right here now, you see prices coming here the first time, the second time, third time, fourth time, fifth time, sixth time, seventh, eighth, 9, 10. So you see prices keep coming back to this level. This level here is trying to show strength, that prices haven't been able to break it. This makes it a resistance. You see the difference between this and this is, take a look. You could see prices haven't come to this level for a very long period of time, and then finally comes here. But on the other hand, for support and resistance, we could see prices consistently testing that level to try to keep testing that until it breaks above it. Now this was a resistance, which also served as the neckline to these heads and shoulders. Now when prices broke above it, it went up to this level here, which was a previous support level. And why was it a previous support level? Here you can see prices coming back to this level. You have 1, 2, 3, 4, 5, 6. A strong institutional candle kind of broke here, and then 7 prices coming back to this same level here. Now this level here was a support level and then became a resistance level at this point in time, since prices began to reject at this level. So this right here was kind of a sell zone already, because it was a previous support that was broken. So prices had to go back, to retest this level. So you see, we have a break of this level to this point, to this demand zone. Prices kept pulling down to the demand zone, and prices are up back to test this level here to create a resistance of this previous support level. So this is the difference between resistance and the difference between support and resistance and demand and supply. So for support and resistance, you find them within the trend. You usually find them within the trend. So now we could identify here as a demand, and here as a here as a major supply, and here as a major demand. You can see the gap between them. So if we were to trade a long-term demand and supply, we'll be expecting prices to possibly get back to this level. We'll be expecting price to possibly get back to this level again, just to show the level of swing, a swing high, a swing low, and back to test the same swing high, of that sort. So this is a long-term demand and supply, so demand here and supply region at this point. So now back to our chart pattern here. So now we'll be expecting prices to kind of like test this level, expecting price to come back to retest this level before any further move upwards. And then prices could still possibly break below this. But what we'll be looking for at this support and resist, as this um resistance about to turn support level again, would be rejections. We'll be hoping to find rejections here, to go long. That's to buy again. We're hoping to get rejections at this point. So basically, the things you have to consider about demand and supplies, support and resistance, are you're either looking for a break and a retest, you're looking out for rejections. But with this breaks and retest rejections, we also have to keep in mind to find chart patterns. Candlesticks patterns. Something like your morning star that happened right here, or you're engulfing at this point here, you're engulfing at this point. This candle also looks like, this candle is looking like an engulfing also as well at this point in time. So all these candlestick formations that we've learned during our basic candlestick training are some of the things that we need to put in place alongside our demands and our supplies, our support and resistance. So it's all about identifying these price levels in the market, and then identifying that they are support and resistance or demands and supply. Then we look for price action candle setups. Like for instance, at this point here, we could see this inverted hammer at this point here, and then we could see price fall all the way down to around the level of this shoulder before this indecision happened, and then some form of a morning star happened at this point in time. Now, a morning star happened at this point in time, not just at any point in place, but it happened at this shoulder level here. So this was a valid candlestick formation that had gone in for a longer buy and hoping for a breakout at this point in time. So that is my own key to trading price action. So another thing I spoke about was price levels. I usually don't mess with price levels a lot of times. So I'll take for instance I'll take this level here. This level here, where we had a lot of false breakouts, and and this candlestick here. Now, if you look closely, you would see prices having getting to this point here. So when price having getting to this point here, and then you could see even when price was moving up, it kind of rejected at this point, kind of slowed down a bit before breaking through it. And then now you could also see prices closing at this point here. So price levels like this, where maybe you might not have considered a favorable support level, could also be very significant in the market. That is to say, because prices have gotten to that level before, also makes it important in the market. So you don't just try to ignore where prices have been to, even if you could identify a stronger support level, maybe at this point in time. So at this level here, you could also mark it out and make sure that you have eyes on it. Wherever you see rejections, wherever you see candle rejection, no matter how small it is, it's actually significant because it could serve as a reversal point at some point in time, especially maybe on a smaller time frame, and you find it could serve as a reversal point at some point in time during your trading day or whatever. So you also have to keep in mind that, so you don't get to that point and then prices begin to reverse on you. So let's just move into a smaller time frame quickly, and let me show you what I mean by having to always keep an eye on that price level. Now, if you can see clearly, this was the price level we drew just a moment ago. You can see it. You can see prices reacting already at this level and then kind of rejected back down before breaking above it. And then we also see prices in this level also. You can see some form of rejection and resistance at this level, and then prices coming back down. Now, if let's reset this chart a bit. Okay, if we're to go back to let's use the 1 hour time frame. Okay, you could see price some form of reactions of to prices at this level also once upon a time. This was December 20th, and yeah, you see there was a strong reversal at this point in time, a very strong reversal at this point in time. So if you were to ignore this level here, you wouldn't know this had happened before. So that's why I usually advise people to, while making chart analysis, try to go back and look at the history of that chart to see where some form of price actions might have happened at certain point in time. Now you see this was a very, very strong reversal here that even broke through this level, before coming back down and kind of tested this level again before coming back down. So ignoring this might be at risk of the trader, because you might have your let's assume here, when this buy came in here and then started reversing on us, but because there was already a strong supply level here, kind of strong supply level here, due to prices, the fact that prices haven't gotten to it in a long while, it had to get to this point before reversing. And you can see prices being held up at that same level again, the same levels we drew with our two red lines. So you always have to keep these four things in mind while trading price action. So first of all, you have to differentiate between supports and resistance and demands and supply. You have to think about your candlestick candlestick formations. You have to think about rejections, breaks, and retest, and then you also have to think about price levels. And just a quick one, just in case you're the type of trader that is lacking confidence, you might want to use a bit of an indicator. Most times I advise an oscillator for confirmations. So let's assume you're in a trade right now and you see these rejections at this level and you're kind of skeptical about it. You could use your stochastic indicator or your MACD or your RSI. You just need to find where the overbought and the oversold levels are. For your stochastic, you'll be hoping to see a cross between the K moving average and the D moving average of the stochastic to cross over themselves, for instance here, to cross over themselves at this point in time this way, and then spread its tentacles down, pointing downwards, and then you would have more confirmation or more confluences on how to take that trade. So that's it, guys. You could use your RSI also. You're wanting to see your RSI in the overbought level at this point in time, and a break in momentum. You want to find a break in momentum. Let me just quickly add the RSI here so I could show you guys. So the RSI of 14 is one of the strongest RSI. So this is what I mean. You see prices come here, and then we could find a break in momentum here. You can see prices hanging on this overbought level, and then a break in momentum at this point in time, and then you can see how prices have fallen down to this same level. So these are some certain things you can use, you can use to trade your price action, just in case you are lacking confidence in pure naked charts. So that's it, guys. So that's it, guys. So thank you very much for watching. um Hit wherever button it is, but this actually wasn't meant to be a YouTube video though. But just feel free to come into my DM. Just search RionFx on your Telegram, your Instagram, or your Snapchat. Find me, hit me up, follow me, whatever questions you have, and just ask me all your questions.